Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it was gon' change, then it really didn't. It's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe, and the money gotta stop it. Kid need food, and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partners. We back in the saddle again, y'all. Good to see you guys again, man. Cliff, how was the week, Doc? Was it good? Holla at your partner, man.
Man, no good week. No good week. You know, it's getting interesting out here in these streets, though. It's different. It keeps changing.
Ooh, man, Cliff, bruh. It keeps changing for real, y'all. I'll get myself set up real fast, man. Y'all, we got to dive into this, man, because of the fact that we're gonna take a look at today, Cliff, man. The single family residence as well as the commercial thing, man. We're gonna dive into this thing real talk. Y'all got a special treat for y'all today, man. So, man, the week for me, man, has been pretty good. I'm negotiating some pretty big deals. So is Cliff. Cliff, man, Cliff been killing it, y'all. When it came to the portfolios, man, Cliff has found him a niche, man. That it's a pretty good niche, man. Man, tell everybody about the niche, man. What's going on with that, Cliff?
So it's just looking for single family rental properties, probably smaller type of multifamily deals. So I mean, they got a lot of opportunities out there once you understand what you're looking for.
Yeah, man. Yeah, man. They do, man. And Cliff, we're working on a lot of transactions. We're looking to work on apartment complexes right now, portfolios right now, an investment bank scenario as well. I ain't gonna tell you about that one. That'll shock you a little bit as well. And some additional new construction projects. We got a lot going on. Is that right, Cliff?
Yeah, yeah, man. Hey, you guys, what I learned is you got to stay busy. So that's what we try and do.
Mm-hmm. Mm-hmm. Well, y'all, man, let's dive into this thing, man. You know, every single time we do this, we got to dive into the current market analysis more than ever, guys. We're going to have to look at it and see exactly what's going on. And so we're gonna take a really quick look at what's going on in the market real fast. We're gonna look at two areas. The first area we're gonna look at is we're gonna look at the area of the single family residences. And Cliff, we're gonna go to the Bay Area in California, and let's begin to talk about what's going on there. And then it's a very short one, and then we're gonna graduate over to the commercial space. These videos happened this week, and also we have a video also on excuse me, excuse me, DR Horton. DR Horton this week, they actually reported some interesting numbers. DR Horton is the biggest builder in the nation. We're gonna see what they say. So let's dive into this first one with the Bay Area. Let's dive into this real fast. Let's get into it real quickly. Get rid of this real fast, y'all. All right, here we go. Let's dive into it.
The Bay Area has the worst performing housing market in the nation. This is from Parcel Labs, which tracks the housing market, and it says prices in the Bay Area have dropped a staggering 24% from their peak last summer, which is double the national average of 10%.
It's crazy.
Analysts say that is partly because people have been moving away, meaning there is more supply than demand. And the co-founder of Parcel Labs says this has a lot to do with those interest rates.
Wow. Listen
So
to this.
you see indications of mortgage rates coming down, particularly a big decline in interest rates for mortgages, then you can expect home prices to go up over the subsequent 2 months.
So Cliff, man, what do you think about that whole thing? They're talking about in the Bay Area. What they're saying is they're saying the Bay Area has the worst housing market in the nation, man. What do you think about the whole thing, bro?
Oh yeah, because it was the most inflated. So makes sense to me that way, when you raise the interest rates, it's gonna get knocked off the most. I mean, when you got 1,000 square foot houses going for 2 million, it don't make
Yes.
sense.
Don't make sense at all, man. California, y'all. I can tell you right now, I make no investments in California or New York. And I'm asked all the time, would I invest money? The answer is no. Because the policies from a state standpoint, and I know you have counties and local areas, which is fine, but I don't think it's wise for me to make an investment in real estate, knowing that the laws are from a state standpoint is really against lenders or investors, if that makes some sense. All right. So that's what's going on with that, man. And now let's go on to the next one, Cliff. Now let's go over to the commercial side. The commercial side, yeah, in real estate has really taken a serious hit. And I want you guys to see exactly what's going on, man. This is CNBC. And this person talking on here is an expert in this area. So listen to it and then make Cliff will react, guys. Here we go.
With more on this, Bill Rudin, the CEO and co-chairman of Rudin Management Company and former chairman of the Real Estate Roundtable. Bill, it's great to see you. I also want to get you in on that conversation we just had about New York, which I think is unto itself a fascination. But what do you think of what Barry said, and how concerned are you about not just these real estate books, but really the regional bank sector at this moment?
Well, first of all, great to be back in studio with all of you,
Nice to see you.
Old friends. I think Barry's spot on. There are definitely significant storm clouds ahead. That's why the Real Estate Roundtable sent a letter a couple of weeks ago. I think you had Scott Reckler on
Right.
to the Fed, to the Office of Controller of Currency, to other banking regulators to talk about what we see coming forward. There's a $1.4 trillion of debt coming due over the next 3 years. And what's the best way to realize that there's a credit crunch going on right now? Their banks are not lending. The regional banks definitely are not lending. And how do we work our way through what we know is going to be issues as some of these loans come due?
You though, I mean, underlying this is the issue of office. And vacancy in office, especially not necessarily among A-class buildings, but B and C-class buildings. Clearly, we've had conversations about what happens to cities and what happens to the real estate, the commercial real estate office space in those cities. You've been very bullish over the past couple of years, but here we are at a moment where I think people are now looking and saying, actually, this may be a little bit tougher, or maybe a lot of it tougher.
No, there's no question about it. There's this bifurcation of quality, people going to the better buildings. Our building across the street, right behind you, we rented to a major university, Touro College. They have 2,000 people in that building now, 300,000 feet. So it's incumbent upon cities, and that leads to sort of the conversation you just had, is to continue to diversify its tenant base, healthcare, bioscience, biomed, media, entertainment. Some of these companies are growing. We see companies expanding, but there is definitely significant vacancy in the B and C, and that's why Senator Gianaris and his caucus and the governor and the mayor are talking about conversions, allowing office buildings to be converted to residential. That's not going to be a silver bullet, but that adds to the vibrancy of cities. It takes inventory.
Wow.
We did it in Lower Manhattan in the in the mid 90s. We went from 10,000 people living in Lower Manhattan to 70,000.
As a real estate guy who cares.
Cliff, man, they're talking about converting office space into residential living areas. I have never heard of that before. Have you?
Yeah, I've heard of it before, just doing the conversion on it. It's more popular now because obviously we're not going back to the office, and it's not going to change.
Gotcha.
We're going to get better doing things online. So, but from what I can see, the only way that they can do that conversion, because it's not, and you know this, if you're gonna put an office and say we're gonna put 200 units in it, that's 200 bathrooms.
Yeah. Woo.
That's 200 kitchens.
God.
It ain't plumbed for that. It ain't built for that.
Oh.
So yeah, it's not going to work out. What's going to happen is they're going to have to restructure their taxes. The city is going to have to give them an incentive to do that restructure to add more affordable housing.
Guys, this is the commercial space. And what he was talking about, the reason why they're trying to convert those over to residential, which I agree with Cliff is a bad idea. What's actually happening is there is a large inventory of office space on the market, 36 months and above. Normally 12 months is normally the sweet spot, maybe even 6 months. 36 months plus is the inventory in some areas, and that's in good areas. If you go to New York or to California, you're looking at more than 48 to 60 months. And so it's crazy, guys, what's going on. It is crazy. It's crazy. Now let's graduate over to D.R. Horton, guys. I want y'all to hear D.R. Horton real quickly on what's going on here. Listen to their earnings. Again, D.R. Horton is the largest builder in the nation, right? They're the largest. Listen to their earnings. Here we go.
All right, folks, we got to talk about the earnings report today from D.R. Horton, America's largest home builder, because this was a very bad earnings report. D.R. Horton reported a massive 35% crash in income year over year, and they reported an insane 44% drop in their sales order backlog. Signals that this housing downturn is still getting worse and it's hitting the builders' profits. However, here's what's crazy, everyone. The stock market and housing market bulls actually love this earnings report. D.R. Horton's stock price right now is trading at the highest level of all time, with all the mainstream financial outlets saying that they smashed earnings and this is a sign of an encouraging housing market, which is pretty scary, everyone, because when a company reports a 35% decline in earnings and a 45% decline in their future earnings through a lower order book, you would expect the stock price to go down. But no, the stock price is going up, and that's because there's a certain mania right now still in the stock market and housing market where people who are bullish are just looking for anything they can latch onto to justify their bullish. And ultimately, this scares me for what the downturn is going to look like when all of these people wake up to reality. Because when I look at D.R. Horton, America's largest...
So Cliff, what are your thoughts process on that whole thing with D.R. Horton, bro?
Yeah, hey, they ain't making money. I don't know about the stock is completely different. I think that's a different process, but the company is down. They're having to do buybacks on interest rates, which is basically what happens when the interest rates are so high that the banks, or I'm sorry, the builders, the developers are willing to pay the banks to bring down the interest rate. That's never happened before. You ain't never had a builder say they're gonna buy down your interest rate.
And that's crazy, guys. A lot of builders are, because they have the paper, what they're doing is they're actually offering for you to buy down your rate. And so you can go to a D.R. Horton and buy a house at an inflated price point, but they'll say, okay, we'll give you a credit to buy down your rate 1 or 2 points. And so that's making it enticing for some consumers who don't mind paying an inflated price point to go out and actually buy a new construction. Would I do that? It depends on me. No, I have to negotiate a better deal from a price point standpoint, and I'll still take the interest rate buyback down. But man, 35%, guys. Now, why is the stock market doing what it's doing? I believe, to be honest with you guys, a lot of these companies are counting on the loss. They're counting on the loss because they can write off on the taxes as well, and also, because of that, they can leverage that. So in other words, again, fake success. If the stock price is going down 35%, why would the mania of buying more of the stock actually be higher? It's very, very interesting for me is that able to leverage, do it what they call loan securitization, take a loan out on the stock, then buy it back, and also they get the benefit of the loss and the debt to write off the taxes. What do you think, Cliff?
Yeah, that's what I'm thinking too. The stock, what I think what's going on in the entire stock market is it's still high right now is, and I started buying a little bit a while back in the stock market, is the money that was in inflation is still there. It's not gone.
No,
They're just not spending it. They're slowing down on the spending because costs are higher due to interest rate and additional inflation. The second we get to an interest rate that is decent, you're going to see it boom again. We are going to have inflation for the next 10 years. So everybody know the prices have to go up. They're not going down. They printed too much money, and Dale brings this up all the time. The government ain't even spent most of the money that they've already printed. They ain't even spent it yet. At all. So that's why the stock market is high. They're betting on the idea that when the interest rates get decent, everything's gonna go back up again.
And that's an invest and hope scenario. Very dangerous. Very dangerous. That is the reason why I'm telling those that anyone that has a retirement account, a 401k, IRA, Roth IRA, 403b, a TSP, whatever type of account it is as retirement, you better get your money out of those environments and put into a more secure environment, because this is the type of things that these companies are doing. It's real simple. Now, guys, let's go a little deeper on analysis. There's a company called Opendoor. Opendoor is the largest acquisitioner of real estate in the nation. Guys, I want y'all to see this here. We'll talk about this today. Opendoor, guys, they have failed. Opendoor, look at this here. Let me get to it. No, not that one. Give me one sec here. Opendoor, guys, was a part of the Silicon Valley collapse. All right? Opendoor, they've lost. They got hit for the FTC just slapped Opendoor with a $62 million fine for misleading consumers about the true cost of its home buying business. So they've been lying to people the whole time. Been lying. And they've been buying terrible. Cliff, walk through the numbers of how these fools were actually acquiring this stuff.
Basically, Opendoor, they had an AI algorithm that they trusted to make all the decisions for buying and selling properties. Their goal was to try to make 6%, a minimum of 6% return on all their properties. Now, anybody who knows who flips houses, ain't nobody trying to flip for 6%.
That's right.
They knew it wouldn't work. So Opendoor, the entire model is going down. And the same as Zillow, and the same as Redfin, they all stopped buying properties at this point.
Yes, sir. Now, guys, let's go over to Zillow now. Boom. Here's Zillow. Zillow. Why is Zillow selling? This is Bloomberg. Don't buy Zillow homes. Got the way. A tale of failure, mistrust, and hot housing markets. Twitter and TikTok users are raging against the real estate firm as it looks to sell 7,000 homes for $2.8 billion following the failure of much vaunted business. 7,000 homes. This is Zillow's failure. The same formula. These guys were actually buying properties terribly, right? With a 5 to 6% arbitrage there or spread there. That's a terrible spread. You agree, Cliff?
Oh yeah, it's that's way too light. Whoever bought it, the people who started the company are Silicon Valley people, not real estate investors. They're technology people. They got into an industry and into a market they don't understand.
And here's another one, guys. Redfin. Here go Redfin, y'all. Here's Redfin. Redfin reports a $90 million loss, plans to take share, kick butt. $90 million loss. This is Redfin. Same scenario. Bought terrible with a 5 to 6% spread there. Terrible numbers. Horrid numbers. But these are the institutional investors that Cliff was talking about. They don't know what they're doing. They're sitting behind a desk and trying to make these assessments based on some numbers. They're not on the ground at all. At all. It's trash. Garbage. You agree, Cliff?
Yeah. I mean, they don't understand that buying real estate is local. It's very local, and you have to understand your business model. What I'm worried about, and this may be the next, they're not going to give up because real estate's too big of an asset class.
Yes.
Watch them start moving into the rental space.
Ooh, they're already there. They're already there. So now, go ahead, Cliff.
I was going to say, imagine if Open Door, Redfin, and Zillow changed their model.
Just changed it
to rental and start with BlackRock and get that. If those companies get together, the rental market will explode. I mean, there'll be no deals. They'll just soak them all up and rent them.
That's why I'm confused about why they're selling 7,000. Redfin is. Was it Redfin or Zillow selling 7,000? Why they turn it into the rental property? Unless you can't, because you bought so bad.
I think they bought. There was a story. Y'all listen to this story. The Zillow and the guy was Zillow offered this guy $800,000 for his property. $800,000. This is the peak of the market. He sold it because he said, "I'll take 800." 8 months later, Zillow had resold it for $630,000.
Say the numbers again.
He sold it for $800,000. 8 months later, it was going for Zillow sold it for $630,000. $170,000 loss.
Wow, that is crazy town, guys.
Where was it? California.
Yeah, California. Now you see why I don't buy in the Sunshine State.
Yeah,
I don't touch California, no sir. All right, guys, enough bad news, man. Let's get to the good news, to the strategy, guys. Y'all here for the money piece, for that bag, and your partners got you. How to make 5 to 10K per month, guys. Per month, guys, in real estate. All right, guys. Cliff, man, is this possible in today's economy, in your opinion?
Yeah, it's possible. It's harder than it normally would be because there's a lot of different options, but it's definitely possible. You just got to stick to the basics, understand what you're looking for, and play the game.
That's it, man. Guys, it is all a game. That's all it is, guys. It's just a game. So let's jump into it real fast, guys. Let's look at it from a wholesale standpoint. So, Cliff, man, for those wholesalers, what is wholesaling, Cliff? Let's define that, and then we go to strategy. What's wholesaling?
All right, so wholesaling is simple. It's getting a property under contract, getting a piece of paper to some terms, and selling that piece of paper. I'll give you an example. I'm looking to buy a house. I offer the seller $100,000. Now I have that contract. I turn around, I call up Dale. What's up, Dale? I got property for $110,000. Dale says, I like that number. All right, I just made that $10,000 difference on that contract. That's wholesaling.
Now, in that scenario, was there any credit that you needed?
No.
Did you need any cash?
No.
Did you need any capital like a loan?
No.
So it's just a piece of paper.
You're selling paper.
So here's my question: is in order for those numbers to work, is it wiser to look on MLS, off the market, or direct to the seller?
Direct to seller is always gonna get the best deals. Always.
Yes.
It takes the most work. So if you're doing this, you gotta put in the work. And if you do that, there's some deals out there.
So basically, guys, if you get a property a distressed property or a property that you acquired at a discount, whether it be on MLS, off MLS, or direct to seller, or what they call off market as well, which is fine. What you can do is if you can negotiate well and know your numbers, you get a property, for instance, buy for $100,000, it's worth $200,000. Then you find somebody you can assign or wholesale the property over to for $110,000. What you do is you can actually make that $10,000 spread there, and you have nothing at all at risk. That's wholesaling, and you can do that 2, 3, 4, 5, 6, 10, 20 times a month. Easy work with no credit, no capital, just a pen and a contract. That's it. Real simple. All right. Let's go to a rental strategy real fast. I'm sorry, a flip strategies for those flippers. Okay. So from a flipping standpoint, for those in the back row, what is a fix and flip strategy? What is that, Cliff?
It's what you see on HGTV. You buy it, put some put some kitchens in, put some bathrooms in, fix up the flooring, paint, and you try to resell it for a higher price.
Yes, sir. That's it. So again, that's using the numbers. Again, now, is it wiser to buy on MLS, off MLS, which is off the market, or direct to seller?
To direct to seller, like I said, direct to seller is the best way. Now I've done it all three ways. I've done on MLS.
Yes.
And I find a lot of deals through MLS.
Yes.
But I try not to. I'd rather go direct to seller, but it depends on whatever your strategy is. I've had success on MLS too. So, but the best one is going to be direct to seller. You got to find a way to contact them and negotiate.
Well, we got a question on Instagram. Who are you going to get to buy it? Easily, a cash buyer like myself.
Mm-hmm.
Someone is actively looking to acquire real estate. Whenever you are trying to wholesale a property over, you need a cash buyer or someone who has access to capital to acquire it. There's a plethora of investors that would love to buy good deals. The key word is good deals. So you should know your numbers. For instance, on the fix and flip scenario, I'm using the same scenario. You have a property that you are acquiring for $100,000, right? $100K. You know what I'm gonna do? Let me go ahead and bring up my calculator. People have to see it to believe it. Ain't no problem. I'm your partner. We're gonna keep it moving. Here we go. Boom. Hold on, y'all. Let's go to the calculator real fast for the folk in the back row. Can y'all see that? Y'all can see it. Y'all can see it. Here we go. Now, so again, you're acquiring the property for $100,000, right? $100,000, right? Let's go back to the wholesale scenario, and then we go to fixed scenario. Okay, the after repair value is $200,000, right? So ARV is $200,000. You are assigning the property or wholesaling the property out at $110,000. So $100,000, right? Get this out the way. $110,000, right? For people say minus $100,000, boom, is you made $10,000 because the ARV is $200,000. Those numbers work. That's attractive to me because that means if I have to put only $15,000 into it, I'm good. I'm all in at $125,000, right? So me as a cash buyer, if $200,000 is the ARV, I know I can get 75% of it. That's $150,000. I'm all in at what? $125,000, right? Because again, Cliff got it for $100,000. He assigned it over to someone at $110,000. I bought it at $110,000, which is fine. I put $15,000 into it. I'm all in at $125,000. So $150,000 minus $125,000, all right, is what? Come on now. You're gonna let me do it? Okay. What just happened? What is going on here? It just froze. It just froze, Cliff. That thing just froze on me. It's okay.
Yeah, but it's basically as long as it's worth money, that contract is worth money to somebody else more than what you got it for.
There we
go. Wholesale. I've wholesale for as little as $1,000. Someone offered me $1,000 over. Okay, I said okay. I'll take that right quick. So you do 1,000, done it up to 10,000, where someone can give you $10,000. So it's whatever buyer you find, and there's a lot of buyers out there. It's a process in order to find them, but they out there.
Real simple. The same thing for fix and flip scenario. The same thing.
Right.
If it's the same scenario, again, $100,000 signed up for $110,000. I'm $15,000 into the deal, which is fine. So I'm all in $125,000. ARV is $200,000. Minus 200,000 times 75% is 150 minus the 125. I've netted $25K. I've won, the wholesalers won, as well as Cliff has won. It's real simple. Everybody's made money. And Cliff, as a wholesaler, had nothing in the deal. Nothing. Is that right, Cliff?
Yeah, no. All you gotta do is get the property under contract.
That's it. Now on the rental scenario, it's a little different. But it's the same scenario. Again, the same scenario. $200,000 is the ARV. I know as the buyer, I can get 75% of the ARV. That's $150,000. I'm all in at $125,000 with those other numbers, right? So minus $125,000, I'm still netting $25,000 in profit, tax free, which is great for me as a renter, and I put someone into the property to lease the property out. Everybody wins. It's simple. You can do this wholesale strategy, guys, right here. This wholesale strategy over and over again. You can make 1,000, 2,000, 4,000, 10,000. I see people make 25, 30 grand on an assignment. Have you, Cliff?
Yeah, man, that's it. Whenever you start getting into the higher end type properties and you start understanding luxury and you start understanding those, you can see crazy type of wholesale fees because the opportunity is so high.
But the key thing to this, guys, is you're going to have to know how to locate distressed properties. The deal drives everything. The deal does. If you don't know how to find distressed properties in your area, guys, there's no wholesale opportunity, there's no rental opportunity, or fix and flip opportunity. You agree, Cliff, or you disagree?
No, I agree. It's all acquisition is the game. That is the game.
That's the game, guys. If you can't locate a distressed property or property at a good price point, guys, it doesn't have to be distressed. It can be someone that just wants to get out of the deal because they want to move. It's easy. The deal drives everything. We got a course for that for $97, guys. Simple. We go through step by step, and there's a little known technique that you can use in your local town right now as you speak. Right now, you call your local town, and you will actually get access to properties in your town that are off the market. Cities are looking for people like you. They want you because why? Cities make money on property taxes. So they need people in those properties paying those taxes. So they're looking for people that actually come in and revive the city with housing that makes some sense.
Exactly. Now, the city, if you go to the right places, you can find opportunities.
Yes.
And my whole thing is you'd be amazed what one house a year can do.
One.
Starting small. You'd be amazed. Next thing you know, it's 2, then it's 4. It just grows. But that first one's the hardest one. That's why we made the course, because it's for $100. You get a basic introduction of how to start doing the acquisition process. And from there, you can start growing.
And this is in your town, no matter where you're at. Now, someone on Instagram, Christina, said rent to own. I love rent to own scenarios. I love it. The reason why is because of the fact that I'm a person that likes to acquire, renovate, and hold. So I love the rental strategy. That's me, right? So I acquired a property at the right price point, whether it be me going direct to the seller or dealing with a wholesaler, and I go through those numbers, okay? So I'm one of the ones that you're looking to wholesale to. Me. I'll buy it. I'll do that all day long, okay? I'll write a check for it real quickly. Now, with that being stated, what that does for me is I like for that rent-to-own scenario because some people may not have the credit right now. So I do a rent-to-own to where you can rent it for 12 months and then I'll finance it out to you myself. Or you can go out and get capital on your own at the end of the leasing term. I love that. Why? Because that works best for me and the consumer and the city and the county and the state and the nation because taxes are being paid. If that makes sense. Cliff, you agree with that?
Yeah. Oh, yeah. Rent to own. Yeah, I like rent to own. If you get the right tenants, you just got to make sure you follow the law because there's some states they won't let you do rent to own. Mm-hmm. You got to make sure you're compliant. So make sure you talk to your local attorney and find out exactly what the rules and regulations are for your state to make sure you're doing everything right.
Yes. And guys, when it comes to your legal counsel, please do not go cheap. If don't go cheap on that because you get what you pay for when it comes to legal counsel. Make sure you have wise counsel around you. Okay. That's the reason why we made the course is because of the fact that you get all the knowledge you need. You get our cash flow analyzer as well. You can vet the deal yourself and also access to us. You can reach out to us. and we'll answer the question for you and make sure that it is structured the right way. Yeah. Now, Christina keeps saying on her Instagram, Minnesota. What area in Minnesota? Minnesota doesn't have really good laws, so to speak, from a law enforcement standpoint and a regulation standpoint when it comes to taxes and make it more friendly for capital to be invested, which then creates jobs, which then pays taxes because people are paying the taxes, which then people buy homes, buy cars, things of that nature. So it really depends on the regulations. I'm looking at the regulations and the tax code in those cities, counties, or states to see if it makes sense. Does that make sense, Cliff? So, but
right, yeah. I mean, so basically, we call that's called investor friendly. We want an investor friendly state.
Yes.
That the rules are set up so that an investor can be successful. I don't know a lot about Minnesota, but I think it's one of those non-investor friendly states where the rules and regulations are not set up for you to win. So you got to double check your regulations to make sure you're compliant, because out there in Minnesota, it may be a little tough. That's like a California or New York. You try to operate out there, it's difficult. The city's out to get you.
They will get you, and they will get you guys. Yes, they will. But this is the reason why wise counsel, a team, is so important, because that team can advise you how to get around those iffy areas legally, not slippery, but legally. All right, guys, it's very simple, because we want you guys to get one of these as well, y'all. I call this our diploma shirt. I got that bag university. My diploma is the bag. Okay? My diploma is the bag. And so once you close your deal, get you a shirt too, baby, and say, look at my diploma. Here you go. That's all you got to do, man. but that's it. Your diploma is the check. That's it. That's the diploma. It's real simple. But guys, man, that's all realistically had. We have question. Now y'all got my wheels turning. This process never clicked before. Let me see. I may have something. Cool. Jess, reach out to us, DM us, which is fine. But again, guys, I can't stress it enough in this time frame, because realistically, for this course, guys, what we go into, we should be charging about $1,000 to $2,000. Like, for real. We give you a bunch of information for $97. Because we want to make real estate easy for people. Because more than ever right now, with layoffs, things of that nature, to be honest with you guys, people are looking for a side hustle. Well, this is a perfect side hustle. You want to say anything, Cliff?
Yes. It's like we were saying, it's a good introduction, right? Trying to get your foot in the door, learn a little bit, and trust me, for $100, you're getting a bargain. We're just trying to get you your first step into the business, because once you get rolling, we're trying to add more to our team. We're looking for more deals. Always. Dale, you looking to buy a deal?
All day, every day.
Always.
Always. Day, every day.
So you can join the team, join the squad, be on the team with us, trying to do acquisitions, trying to buy more. We got the whole system set up. So this is trying to help you get your foot in the door, ultimately help the team succeed. Everybody wins.
Jess on Jesslyn on 505 on Instagram is saying that her town is booming. What town are you in? If you want to share it, if it's booming, holler at your partner. We like booming areas with the right strategy. The right strategy.
Yeah, I want to see what area this is. I want to see what area.
Yes. What's up, Steven? How you doing, Steven, man? But guys, that's all I have for today, man. Cliff, you want to say anything, man, before we get off now?
Nah, man, it's gonna get interesting. We got the Fed deciding what they're gonna do pretty soon, so we don't know. We don't know. We're gonna see. We're gonna see. So we're gonna come back next week, give y'all an update, see what's going on with that. Try to get y'all one of these T-shirts. Get that bag.
Yes, sir, man. Hey, man, show us your diploma. Show us the bag. I don't want the paper. I don't want the diploma. Give me the bag. That's my diploma, damn it.
You say your diploma a bank statement.
That's it, man. My bag is 10 racks. What's your diploma? I made 10,000. Like real talk, guys. Cliff, are we making that type of money on a monthly basis, man?
Man, there's so much opportunity out there, man. It's crazy.
It's crazy, man. But yeah, man. Hey, get you one of these shirts, man, so you can show everybody your diploma. That's it. You got your diploma from I Got That Bag University. I said it with my chest. Now take the damn picture. Anyways, man. But guys, man, thank you so much for your time, guys. God bless you. Oh, Jesslyn says she's in Hickory, North Carolina. Hickory, North Carolina. Steven said, how can I join? Hey, Steven, what you can do, man, is two things. You can DM me, brother, and I can actually send you over the link for you to actually buy it. Or if you have your phone, you can scan this QR code right here, guy. Here, takes you right to it, man, and you get it right there. That's it. So DM me, or I'll DM you the link, Steve, man, and you can go and inquire right there, man. It's real simple, man. Or scan the QR code. We did it this way, guys. People kept asking us, how can we get the course, guys? How can we get this stuff? Here's a QR code. Scan it, boy, or DM me, Cliff, and we'll send you the link. It's real simple. It says they are apartment complexes popping up everywhere. Yes, Christina, we have merch. Yes, we do. Let's see. Really, apartment complexes? I love apartment complexes. We're actually looking at 3 right now in Michigan right now. I actually own 2 in Detroit. 2 right now in Detroit. We're looking at East Lansing right now. So we're looking at those 3. My man Harvey, actually looking at 5. 5. My man Harvey up there killing it. Harvey up there cleaning up there in Michigan. Let's get it. Hey, guys, let's partner up with some deals. Bring the deals, guys. If it makes sense, we'll fund it, guys. If you need some expertise on your deals, some counsel, let us know. We in this thing, man. And again, guys, once you close the deal, man, hey, show us your diploma. Show us your diploma. It's real simple, guys. But guys, thank you so much for your time, man. God bless you. You know how we end every time because we always look better than you. Before you leave, and while you can, and before you leave, get your diploma shirt. All right? It's all good, baby. Take the damn picture and give it to your mama now. Now say it with your chest and holler at your partners, guys. Hey, guys, y'all have a good week, guys. Peace.
Peace.
God give thanks. Whoa. Bless God, give thanks. Bless God, give thanks. Whoa. Bless God, give thanks. Whoa. Big God, big grace. Whoa.